Right, ladies and gentlemen, welcome back to another Sharewise webinar. Today, I'm your host, Sebastian Seracito. I'm joined here with the CEO of Tinybeans Group, Zsofi Paterson. So thank you, Zsofi, for being with us today. I invite everyone to ask questions. Feel free to put it in the Q&A function. I will be asking a couple of questions on Sharewise's behalf and a couple of questions from, I guess, the registrants. But as I said, the more questions, the merrier. So I'll just let you introduce yourself, Zsofi, and the company a little bit.
Great, thank you. Thanks for having me here. My name is Zsofi Paterson. I'm the CEO of Tinybeans. I've been with the business just over a year. I was appointed in July last year after having used Tinybeans every day with my own young family for 3 years at that point, and I continue to be an avid and passionate user of the product with my 2 daughters now. For those who have not heard much about Tinybeans, we are a private and safe family photo sharing app that combines a deep understanding of family needs with technology. We were launched a fair while ago in 2012 in Australia and have been listed since about 2017. And over that time, we've served millions of families across the globe with our private and safe family photo sharing app. We're typically catering to young families, so parents with, really young children that are looking for ways to safely and privately share their kids' moments with a very intimate and trusted group of people around them. We believe very much in the need to keep these family moments private and away from the kind of public social media platforms, and also done in a way that is kind of centralized and aggregated so that it eases the burden for, mum, dad, or parent as it relates to sharing photos across multiple channels with different family members. So at a high level, that's where we are. We are a, subscription-led business. We have a couple of different revenue streams, which we can touch on. But really our go-forward strategy is based around building us out as a product-led subscription business. And our core kind of customer base is actually in the US, which has several advantages in terms of market size and US dollar. And we're kind of headquartered between the US and Australia, with doing a little bit more in Australia now from an operational standpoint than we were even just a couple of months ago. So at a high level, that's Tinybeans.
Brilliant, thanks for that. So we'll just get, I guess, straight into the thick of it. What were the key highlights, of the financial year 2024 for Tinybeans?
Sure. So 24 was a really big and I guess a transitional and somewhat transformational year for the business. So I was appointed as the CEO in July last year, so the very beginning of the year, and essentially replaced one of the founding. He was a founder CEO, and in coming in, I had a big job to do to get across the business, and really help define a clear path forward. The company, in the few years, just before I came, was really quite focused on building itself out as like a parenting kind of publishing platform, in addition to the photo sharing app, and having a sense of kind of what was going on in that landscape. We've really become a lot more strategically focused on building out the product-led subscription business. So over the course of the year, have done a lot to kind of refine and clarify that go forward strategy. Also, as with any new CEO coming in, kind of have a very strong look at the commercials, have a strong look at the content strategy, have a strong look at the product development and the tech platform, etc. So there's been a lot of work kind of just getting across that in order to get us into a shape where we can scale our user base. We did a capital raise a couple of months ago as well, which has helped boost and strengthen our position and our balance sheet, gives us a little bit of cash to work with to enable some of our growth plans. We did a rebrand earlier this year as well, where as I said, the company had been around since 2012. And so we had a bit of work to do to just, refresh and modernize our visual identity and also our kind of brand story in line with, the market and where we were looking to go. And that was rolled out really seamlessly and I think beautifully with great impact earlier this year. And we also then at the very, very end of the financial year had a small refresh of our board as well. So really bolstered our board with a new appointment in both Australia and the US, and really excited about the impact that they're going to make over 2025 and beyond. If I touch on just quickly some of the kind of like key metrics over the course of the year and how they played out, we had 40% growth year on year in our subscription revenue channel, which is the big one that we're really most interested in. We saw incredibly strong engagement and retention rates. And we've had, it was about a 43% increase also in our average revenue per user as well. So there were some, key metrics and financial highlights amongst a year that was kind of very much focused on a bit of an operational reset as well.
Brilliant, brilliant. And from my understanding, there has been a bit of a strategic pivot away from advertising revenue. What really prompted that decision, and how does it impact your growth strategy?
Yeah, so as I mentioned, that was important for a couple of reasons. One, I'm a big believer. I have a history in building and growing and scaling and selling subscription businesses. And I think they're really nice businesses to run, because once you have a good foundation built and then you have your marketing and acquisition channels firing and your distribution set up, kind of scale becomes almost an infinite gain. So I think that, in terms of building out the, future value of the company and the enterprise value, being really focused on growing that subscription-led revenue was really important. At the same time, I think there's not a publisher in the world that is seeing growth necessarily in advertising revenue. I think it's getting more and more challenging, and we are still a relatively small player, very small in the context of US and the parenting category. So for us to continue to compete head on for some of those dollars, and also continue to invest in the assets required to commercialize, it was just a bit of a challenging path. So the company had been ad revenue in decline over the last 3 years or 2 years before I came in. So it wasn't me just coming in and kind of like really changing what was going on. That was the trend that was happening. The company was doing everything they could to kind of hemorrhage that, and we did a lot of work actually to strengthen that as much as we could. And we feel like we're now in a good place. We've got a small team. We've got a revenue target, like an advertising revenue target. We think we have the ability to deliver on it. But in terms of us going for growth and continuing to invest in that part of the business, it's probably something that we're not moving, we're not doing as much of over the course of the next year.
Okay, brilliant. And you are now obviously the main source of revenue is that subscription-driven model, as you said. I know you said you had a pretty good retention rate. What are some other early indicators of the success, and how are you managing that sort of transition to the subscription model?
Yeah, so like we're in a relatively good position there, because our product, we've had product market fit for years now, and I think it's just been really making sure that we continue to invest in the platform and the product to make sure that it's as good as it can be. And then really turning on the marketing and acquisition channels, which is we're kind of at the very early stages of doing that. But some of the early signs of success, I mean, the thing that is, I think, incredible is like the price was increased last year, and it was a material increase. The annual subscription fee went from $40 to about $75. And we retained 89% of our customers through that time. So making sure that we've always got a really strong handle on retention, and making sure that our subscribers are continuing to use and love and enjoy the product is one thing that we are, is very, very important to us, that we're continuing to provide value and benefit to them and their families. And then really the core kind of focus of the year ahead is really driving the acquisition. So the business has been relatively flat in terms of subscriber acquisition, and that's because there hasn't been a huge amount of focus put into it, or a huge amount of resources or investment put into how we're going to think about scaling. So, for us, we have a very, a focused approach in, we don't have unlimited dollars to spend to acquire and to grow our brand awareness and our subs base. But, we're turning those channels on, and we're seeing little green shoots as we go there as well.
Brilliant. And I know at the start you mentioned that one of the main goals of the company is privacy, right? What role does privacy play in Tinybeans' strategy, and how would you differentiate yourselves from these other family-focused platforms?
Yeah, I mean, privacy is really, really core to our value proposition. We see it as something that most families come to us because they are looking for an alternative to sharing photos on those public social platforms. And that is more and more relevant as we go. I think over the last year, there's been a lot of conversation in the media and, in all parts of society, really around some of the risks associated with AI, risks around deep fakes, around digital replicas. And, Tinybeans offers a platform that enables, a little bit of that sharing, but in a very safe and secure environment with a really trusted group of people. So that's kind of also a core pillar to how we're seeing our growth moving forward and how we're telling our story and building our brand awareness as well. And, the platform is really robust. We make sure that we have, secure authentication, encryption in the uploading process. We do annual third-party audits across our platforms, etc. So, making sure that that's really front and center as well is very important to us. And, we see that really resonate with people. So we see that, a lot in the recent survey we did of several thousand of our subscribers, over 80% perceive Tinybeans as a really safe place to share their family photos. And then 90% of those subs also said that they came to us for that reason as well. So kind of continuing to build on that as a value proposition and just, have that front and center in a lot of our messaging is going to be something that you'll continue to see from us.
Brilliant. Yeah, and I guess that ties into my next question about mentioning marketing and sort of brand awareness initiatives. How do you plan to grow your subscriber base even further in 2025, the financial year?
Yeah, so we're going from, essentially when I started, there was very little kind of integrated marketing as it related to growing and driving subscriber acquisition, and there was very little effort put on growing brand awareness as well. Now that there was a fair bit of that done about 3 or 4 years ago, but over the last 3 or 4 years, there hasn't been a huge amount of focus or investment in that. So we're really shifting to and deploying a brand-centric, insight-led marketing and growth plan and strategy. And there'll be efforts in both building kind of the brand awareness and upper funnel stuff, as well as the lower funnel and the conversion-based activities and tactics. So, things like influencer programs, ambassador programs, things like building out some of the affiliate programs so that, people are incentivized to write about us and put us in their publications, etc. We're looking at kind of other forms of distribution as well with really highly aligned brands that are already talking to expecting or very early parents as well. And strategic partnerships for us is a major area of focus because we see it as one of the best ways to get in front of the audience at the right time. And we announced a big strategic partnership a couple of months ago as well, which was the first of hopefully quite a few of these, but with a big US business, a big US baby registry called Baby List. And they actually, it's a bit different in Australia, but in the US, basically every expecting parent goes and creates a registry so that their family and friends know what they want to be given. It's a huge business, and it's kind of controlled by Amazon and Walmart and Target. And then Baby List is also one of those really big players. So we have a kind of multi-pronged partnership with them. We've got some things already kind of in flight with a bunch of other things that we're working on as we enter into 2025 as well. So yeah, look, I'm really excited to be able to play in this space a little bit now as well, and got a good team in place to be able to help us hit some of those goals.
Brilliant. What does the global market opportunity look like for Tinybeans, and how are you positioned to capture it? Because I know you said there's a bit of the US market in there as well. So yeah, I guess how are you positioned to capture that global market?
Yeah, I mean, the size of the market is huge and it regenerates every year. People are having new babies every year. And it's around about 5 million births each year in our key markets. And our key markets are US, Australia, UK, Canada, New Zealand. We don't actually spend any dollars or much time yet thinking about the later three. It's really focused on Australia and the US for us. The US because it's the biggest market. We've got a good already like a good size customer base there. In Australia because we're a homegrown business and we've got a good ability to kind of reach and access a lot of the brands and companies that we want to talk to here. So, and we don't really touch the sides as it relates yet to how much of that audience are Tinybeans subscribers. So we've got a lot of room to grow, and we think capturing a couple of extra % of market share should be something that is achievable to us, and would make a huge difference to our business. So like I'll just touch on, we've got just over 50,000 paid subscribers, but really we've got about nearly 1 million monthly active users, because it's around all the paid subscribers are their family members. And then we have a group of people that are also using the product without paying for it. They sit in our freemium layer as well. So a lot of room to kind of continue to find ways to monetize and service these people whilst also growing.
Okay, brilliant. And how does Tinybeans at the moment plan to further enhance its product offering in 2025?
Yeah, so look, we're staying pretty close to our core in 2025, and that is the private and safe family photo sharing, mechanism. We're continuing to look at ways that we can level that up a little bit, and really our biggest job to do is we see a little bit of leakage in our kind of conversion funnel, where we've got people that come make a start but don't necessarily come back and continue to use the product. So really finessing and ironing out that kind of onboarding and activation steps, which are really critical for any kind of subscription business, is the most important thing as it relates to our product roadmap and product initiatives. We're releasing a gifts subscription as well, which we think is really going to be, quite impactful, because we've got a very high retention and referral rate. And so we want more people to be able to, let's say, rather than go and purchase like a t-shirt for my friend who's having a baby, I'm going to give them the gift of Tinybeans. We think that is a really hopefully compelling way to help see some growth and help enable people to pass the gift on. And that also enables more integration into some of those businesses I talked about, like Babylist and some of the other big registries. So that's also a key product initiative for us. And then something we're thinking about, which won't be a short-term thing, hopefully more mid to long term, but is thinking about, for everyone that's gone and nurtured and curated a family album over, a year or 2 years or 3 years or 4 years or whatever, finding a way to go and print beautiful physical products as well. Some of the merch, like physical photo merchandising, as well as some of the digital photo frame businesses, are also ways we're thinking about expanding our product offering, whether it's by building ourselves or partnering, which is probably more the way that we're going to go. So kind of in early stages thinking about that. And just to clarify, right now people can go and create beautiful printed albums from Tinybeans, and we see a lot of people do that. They buy them for their, the grandmothers of the kids or their aunties and uncles, etc. But we think that there's much more opportunity in that space as well.
Okay, brilliant. So obviously you guys recorded a pretty strong cash balance, given that it is a subscription model. Would you say most of it's going to go towards, sort of boosting that conversion rate, and then the projects that you just mentioned beforehand?
Yeah, it's really, for us, the year is really focused on marketing and growth. So there's a fair amount of investment there. And then there's also, a little bit of work to do to kind of continue to grow our sophistication as it relates to data and analytics as well. That was also an area of the business that hadn't really been adequately invested in over the last few years. So there's some, excited to kind of bring a little more sophistication to those capabilities as well, and making sure that they're really, we use data for the sake of operational and actionable insights to help us on our growth plans as well. So yeah, and the other thing we're doing, which is actually like it's a cost benefit to us, but we're also bringing home our product development efforts and kind of taking that out of the US and bringing it into Australia. It's more cost effective for us, and we've partnered with a great group that we think will be very impactful there as well.
Brilliant. All right. And I guess that leads into, can you talk about the new board and how their experience will support Tinybeans' growth?
Yeah, sure. So we had in July, James Warburton in Australia join our board. So he was the ex-CEO of Seven and has a long kind of distinguished career across media businesses as kind of CEO and managing director. He has an excellent kind of network and a very strong, disciplined approach to running businesses and maintaining kind of like very disciplined cost bases. And he has rolled up his sleeves and is very excited to kind of lean in and bring a lot of his kind of skills and experience as a director for us in the Australian market. And then in August, maybe it was September, maybe it was August, we had Mike Rothman join the board in the US. So he was the founder and CEO of Fatherly, which was a leading kind of publication dealing with fathers in the US, and he had a nice exit of that business. And so he has a number of very, very good relationships in the US, and also just like very strong on kind of marketing and growth and brand building, etc. And is now running a subscription business himself in the US as well. So those two in combination, also with Chantel Millard, our chair, we have a board that's now stacked with kind of operators or people with like strong operational experience, which is, very helpful to me and my management team.
Okay, brilliant. And I know you guys doing pretty well. I mean, you got near 1 million monthly active users and around 50,000 paid subs at the moment. I guess, can you tell us a bit about the user base? I mean, how big are they? Who are they? What's the main demographic, and how do they find you?
Yeah, exactly. So as I mentioned, our core kind of acquisition target is very new parents, and typically it is the mother. And it's often in the final trimester or those first 2 to 3 months after a first baby is born. Typically our customers are educated, high household income, and typically have 2 working parents. So, a really valuable segment of the market. And then they go on and invite usually around 10 to 18 trusted and close family members or close friends that go and follow the journey as the kids' memories and journey as well. We are about 80%-ish US based. There's about 10 to 15% in Australia, and then about 5 to 10% kind of rest of world, and primarily in those Western markets. They're joining us really because they are seeking a secure alternative place and way to stay really connected with their family, but in a private forum. And they're sticking around for those benefits as well. And then, as I mentioned just previously as well, we have an incredible kind of referral rate where we see, around about 93% of our subscribers said they actually go and refer Tinybeans to their friends and family as well, which is why for us it's really important that we enable that organic behavior with some of the things that we're building in the product roadmap, including the kind of gift subscription as well.
Brilliant. All right, and I guess just to wrap us up here, what can investors expect from Tinybeans in the 2025 and beyond? I know you touched on the gifts and other forms of product modes that you're going to, but is there a path to profitability at the moment?
Yeah, good question. So absolutely, that's what we will be working towards. We don't expect that over the course of FY25 though. We've got a bit more work to do to kind of set the base up and really invest a little bit more to fast track some of those product initiatives and also turn on the growth engines and the growth channels. But really, we have a very strong kind of very disciplined approach to costs and cost management. We announced to the market just last week a restructure that we had done where we kind of downsized the US team and we're starting up a smaller team in Australia. That takes out about 20% of annualized costs out of the business. So trying to do more with less, like most businesses at the moment. So yeah, very strong focus on that while we do get the acquisition channels and partnerships kind of running. And yeah, I think we've kind of touched on broadly everything else that we're thinking about over this year as well.
Brilliant. All right. Well, I have no further questions, so I think that's going to wrap us up. Thank you so much for your time, Zsofi. Really appreciate it, and thank you for everyone that's come in to watch the webinar. This will be recorded and posted on YouTube, so you can watch at your leisure if you want to rewatch it. But is there anything else or final comments you'd like to add, Zsofi?
No, I mean, we have really strong belief that this business is a great opportunity for investors. More than happy to jump on calls with anyone that is interested in learning a bit more. There's lots they can read on our investor hub as well in terms of all the public kind of company information. But yeah, we're really fired up for a year ahead, and think that our product and platform has never been more relevant, and so excited to be able to get it out to more of the Australian and US kind of parent space as well.
Brilliant. All right. Well, that's going to wrap us up, guys. Thank you for coming to watch. Thank you, Zsofi, again for your time. And until next time, guys, see you later. Thank you so much. Cheers, Zsofi.
Thanks a lot. See you later.